please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Godawari Power Ispat posted a very strong set of numbers in the third quarter. Remember, the stock was one of our outperformers in 2017. So to understand what's going on and what's the outlook going ahead, we're currently joined by Mr. B.L. Agarwal, the MD of the company, to discuss details. Well, Mr. Agarwal, thanks so much, sir, for joining in. Well, the steel revenues have shown a good growth, very, very strong. But if you could break it up for us, how much of it was price related and how much of it was attributed to volumes?
Yeah, up to Q3, because of pricing, it is about 30%, and because of volume, it is about 10%.
Okay. And sir, what are you expecting then in Q4?
Q4 is still going to be better.
Okay, so just give us a sense of how is demand panning out for steel? Could you give us a sense also on pellet pricing, volumes and demand there?
Pellet is our main contributor to the top line also and to the bottom line also. Pellet demand is very robust now because of Chinese demand spurting on account of the closure of the sinter plant. Accordingly, the domestic demand has also gone up because of 20 million ton of closure of mines in Odisha. As far as pricing is concerned, Q3 average price was 5,300. Currently, the price in the market is about 7,000 rupees a ton. So as far as pellet is concerned, we are very bullish, and Chinese demand is going to remain robust. I have seen one report from China which explains the demand of pellet in China will go up every year by more than 10%. And that is enough for Indian pellet manufacturers to continue to export to China. As far as steel prices are concerned, again, if China, 2.5 years back, because of import from China, the prices crashed internationally. But now China has curtailed its production. They have also become environmental friendly. They want to limit their steel production. They want to limit their export. Currently, the export from India is also to the tune of 1 million ton every month. So whatever excess capacity is there in the country is fully absorbed, mainly by the domestic demand and partially by the export. And this scenario, I believe that will remain to continue. And hence, the prices will remain at the current level. However, I expect the prices to go further because the coal prices are going up, coking coal prices are going up, iron ore prices are going up. So naturally, to compensate for all this, the steel price has to go up. Presently, if we import from China, the prices are almost 15% more as compared to the domestic price. So there is still a cushion to increase the price in the domestic market by about additional 10%. So I am quite bullish on pellet also and the steel also, that this price will continue to remain and rather may further go up.
Well, Mr. Agarwal, since you're sounding so confident, and you did an EBITDA in the last quarter of around 170 crores. So what can FY18 EBITDA look like? What can FY19 EBITDA look like?
EBITDA for Q3 is about 170 crores. The prices in the market has already gone up by almost 20% as compared to Q3. And accordingly, the EBITDA number is expected to go up further. I can say one thing, the EBITDA here on will improve as compared to Q3 by hopefully 30%.
Mr. Agarwal, what's your current cost of production, and owing to linkages, you think it might fall?
As you are aware that our main top line and bottom line are coming from the pellet industry. We have 2 captive iron ore mines, wherein we are able to meet our 70% of the requirement. 30% we have to source from the market. So anything, the cost impact of the market of iron ore will be to the tune of 30% only. As far as coal is concerned, currently we have in coal linkages of about 7.5 lakhs ton, which is about 80% of our requirement. Currently, because of backlog of the railway racks, we are not able to get the full quantity of the coal from Coal India, but we expect that the pending quantity will come up in the and our import of coal will come down further. So on coal front, I expect reduction in the cost of production. In respect of iron ore, I expect 70% being captive, the cost is going to remain the same. 30% we have to definitely bear it. But that will impact our pellet cost of production hardly by 200 to 300 rupees a ton, as compared to increase in price from 5,300 to 7,000 rupees a ton. So net, we are going to get additional margin in the pellet of 1,400 as compared to Q3.
Okay, Mr. Agarwal, operationally you are sounding like there are no problems ever, but the big focus really is on debt. What was your debt at the start of the year, what it is now, and what is the targeted debt going ahead? If you could tell us about your reduction plans.
Current debt is 1,950 crores. At the start of the year, it was about 2,000 crores. And after 1 year, or say by the end of this year itself, it will further get reduced by about 100 crores. And in the next 2 years, we are targeting to reduce our debt by additional 600 crores.
Mr. Agarwal, you have approved fundraising, I think about 500 odd crores. Could you give us some timelines? Will this be single party or will promoters also participate?
We have taken the enabling resolution for 1 year to raise the 500 crores. We will see the appropriate time, but we have full 1 year. As far as investors is concerned, we will not go to a single investor. We want to split it among 5 to 10 investors. As far as promoter is concerned, we have already are holding more than 67%. So dilution is not going to be very heavy, looking to the price trend in the stock market. And we want to continue to remain minimum holding of 55%. And accordingly, we will take the call whether we need to participate in this instrument or not.
Okay, the street will be looking at that very, very closely, Mr. Agarwal. But final question before letting you go. The promoter holding, as you said, is at around that 67%. But quite a large part of that is pledged. By when can you be pledge free? That's a promoter holding?
As far as pledge is concerned, currently we have pledged about 30% of the share. Out of that, about 11% is with the single bank, which we have planned to repay fully, and that 11% will be released by the end of this year itself. As far as balance 20% is concerned, so that is pledged with all the institutions, which will be released only after the complete repayment of the debt, which I believe will be able to repay completely in next 5 years.
Thanks so much, Mr. Agarwal. Pleasure talking to you. Well, the big takeaway there is that the EBITDA for the last quarter was at around 170 crores. Going ahead, the management is sounding confident that because the prices have increased, they can even improve that EBITDA number by close to around 30%. That's going to be interesting. And the next couple of years, debt reduction of 500 to 600 crores. Well, we'll keep an eye on that. One is up 5% today, but it's not about today. From August onwards, I think the stock is up close to around 4x. If you just pull up the last 6 to around 8-month chart, you'll see 400% returns. So keep an eye out on that one. But we'll slip into a short break on that note. You come back, we'll focus on the markets. We'll have Ashwini Gujral.
Market is picking up pace now. Look at that. Reliance hit a record high, 973 now. The Nifty is, up about a quarter odd percent. So 10,920 over there. The Sensex is added 150 point and the mid-cap index has started buzzing again. So now up about 0.4% there. But lots of opinion coming through today. And one of them is by noted economist Nurul Rubini, who says that India should continue with the reforms initiated by the Modi government and that they should increase the pace of reforms if it wants to accelerate the pace of growth.
My advice will be that, first of all, the budget deficit of India is still large at the central level, but also you have fiscal problem at the state and local level, and therefore fiscal prudence is necessary. And the risk is that even if you wanted to do a fiscal stimulus as a way of boosting economic activity, what you have observed in the last few months has been the long-term interest rates in India have gone higher, and have gone higher not just because of global factors, but more importantly because there was a concern that the fiscal deficits are too high.
Nifty is holding with gains, mid-caps as well trading in the green, so that's good going. But let's get a quick check on what's going on in currency space. Manisha Gupta joins in on this Monday morning. Hi, Manisha.
Afternoon, rather, but yes,
Yeah.
good gains. Good gains is what we have seen in case of the crude oil prices. Well, we have seen 0.5% of a jump up here. Remember, the last week wasn't such a great one. You saw the prices decline to a one-week close. It closed 1.5% on the lower side as well. But there is some support come back after you have seen the geopolitical concerns in Syria. It also has to do with the decline in the U.S. rig count, and the markets are anticipating that even as the U.S. shale output has been increasing, the increasing demand as well in the global markets would be taken care of by that, and you will still see the balancing continuing this year and the next as well. And then, of course, there are statements from the OPEC members and Russia that they might continue the output cut for beyond 2018 as well into 2019, and that seems to be adding that further support in prices. But mind you, we are off those $70 kind of levels for the Brent prices that we saw nearly a week, 10 days back. Joining us now is Aurobindo Gayan to talk more about that. Aurobindo, what is your sense? Would you say that a near top perhaps has been done for the crude oil prices as we saw 70, or are you still buying at these levels?
Well, I think the last week's correction was healthy in the market after a good amount of gains that we have seen. So I think the market is now taking good support around $63 for WTI oil. So since we are around that price, I think as long as it is holding firm around $63, one should look for buying it again. But then we'll also have to see that beyond 65 or $66 is something that is seeming to be a tough resistance to crack down. So basically, crude is expected to move in the range of $63 to $66. So within the $3 range, one should plan to buy for this week. Maybe buying on this should be the right strategy. On Indian front, I would say the price which is 4050 levels, we should buy on a little correction around 4020 with a target of 4100 with stop loss below 3980 levels. So basically, it is going to be an inside range kind of trade that we had seen last week. So buying on dips is the only strategy that we are suggesting for this week.
Aurobindo, also, how are you looking at the industrial metals? We have started this week on a positive note for this as well. There is weakness in US dollar, and the data that came in the last week from China, Japan, US has all been positive, whether it's inflation, the job numbers, GDP data, and the manufacturing activity. Do you see the metals as a sector taking support from that? And especially with the restocking ahead of the China Lunar New Year holidays, how much of buying would you expect in this week?
I think the base metals are going to be a little tricky this week as well because we are seeing very heterogeneous kind of movement. Like zinc, I would say it is making new record high almost every day, but then we have seen copper and nickel prices are correcting from the recent highs. So I think the mixed kind of trend that is going to be seen first of all for this week. And one bet that I would like to talk about is on copper. And I think from the technical perspective, more of selling side is likely in the near term. So I think copper I would go like to short on that around 456, 57 level for the Indian market with a target of 445 rather, around 10 rupees decline from here with stop loss of 460. However, zinc is something that is looking excessively bullish and some more buying is still pending in this market. So I think zinc could be that we could see a new high around $3,500 at LME. So basically, at Indian market, we should see a price range of 215 to 225 for zinc. So buying on zinc would be the right strategy, while selling copper on rise will be the right strategy for this week.
Okay.
All right, thanks so much for that, Aurobindo, as well as Manisha for joining and giving us all those details. But by the way, before we slip into a short break, NIIT Tech, I think we should keep an eye out on that stock. It's seen a big run, and this month itself, it's up close to around 19%. Is the street sensing something more? You know, that's the big question. The numbers are good, yeah, fair enough. But the stock is flying away, and volumes are very, very high. So on that counter,
the market climbing quite a bit actually, so it's almost 130 points higher on the Sensex. The mid-cap index too is picking up pace, and we've been pointing out a lot of these mid-cap IT stocks, but also add to it some more, say take a United Breweries for instance, that is now up about 6% at something like a HCC, Godrej Consumer, even United Spirits or M&M Financial. All of these are stocks which are doing well in trade. Well, some important earnings are expected today, so we keep our eye out on that as well. Axis Bank should be in another few minutes.